Hey guys, welcome back to another episode of Market Mastery. You are with your host, Trader Dax. And today we're going to ask the question, is this the best buying opportunity that we are going to see in a generation, or at least our generation? And I believe that we could be about to see a very, very long-term market cycle bottom that could be the best buying opportunity for our generation. Now, we had an amazing one, obviously, in 2008, but, a lot of us were probably too young. I was in my very early 20s at university and didn't have any money to take advantage of that, right? Now, a lot of us, mid 30s or a little bit older. And to be honest with you guys, when I was in university and this was happening, I was actually studying finance at the time and watching everything collapse and, prices getting very, very cheap in the stock market. And I was just thinking to myself, wow, the next time this happens, I'm going to make sure I have a lot of spare capital so I can buy everything very low and ride the next wave up. Because the next wave up, like, let's be honest, this happened in 2009, and we're basically been in a very strong uptrend with, a couple of small, and obviously the COVID dump was quite a large dump, pullbacks. That this bull market realistically lasted 14 years, right? Now, the cycle is generally anywhere from 8 years. They usually say, textbooks will say is 8-year cycle, right? You should have a strong pullback bear market every 8 years and goes for 1 to 2 years. So it's like a 10-year type cycle. But with modern monetary theory, that cycle has been pushed out longer and longer. So this was a 14-year cycle. How long is the next cycle going to last is a very important question. Maybe it's 15 years or 16 years. And that could last. I mean, I don't even want to think about it, but we might not see another buying opportunity like this until, potentially the 2030s, right? So that's something to think about. And I'm going to draw it out to you why I believe that is a potential opportunity that we're about to see, similar to the 2018 global financial crisis crash. Now, in 2008, I should say before that, we scroll back a little bit further. We had this big sideways accumulation period, pretty much from the mid 60s all throughout the 70s, right? In 82, it broke out, flipped the highs, and ran into this really strong bull market that lasted. Let's be honest, that's pretty much 18 years without a pullback, right? And then we went sideways in pretty much a 10-year bear market, even though you could say this was about a 5-year bull. But I think this is actually a bear market rally. And then the new bull market realistically started on the breakout of here in 2013. Right, obviously bottomed in 2000 or realistically 2009, but the 2008 was the crash, right? So there's a few things to think about. Now, more importantly, right, is this long-term trend line put in through here that the COVID dump, sorry, not the COVID dump, this was the 2008 housing bubble burst crash, came down and it perfectly retests this long-term trend line put in through here, right? So that gives us, another decent target to test if we see the same sort of price action, if the Federal Reserve decides to go quite harsh at this meeting on Wednesday at FOMC, and then obviously in the following couple of meetings, we have September 2021, so it's 21st the meeting's on. Then we have one in November and also one in December. So we have 3 consecutive meetings in a row, which is going to be pretty interesting to see. Do they follow the trend of 75, 75, 75? That's going to put interest rates pretty high and a lot of pressure on things like the housing market, which is one of the last parts of inflation that's still holding up that CPI data, which is why we crashed on the CPI reading on Tuesday, right? So that, I think, it all comes down to, if we see a retest of this trend line, it all comes down to how is Powell going to approach his speech, and also how is he going to answer questions on Wednesday. Is he going to come out and talk tough? I think that's a very high probability, to be honest, because he sort of made that switch. He used to always come out and talk very bullishly about the market, especially and the economy, especially in the question time after his speech, right? But then Jackson Hole didn't take any questions and came out and he was very negative in his talk. saying there's going to be a lot more pain, blah, blah, blah. And the market acted accordingly and dumped off very strong, right? Now, there's a lot of people coming out at the moment and saying, talking against the potential for, continuously hiking rates. And we'll look at that in a second. But I want to finish off on this because I believe it's pretty important. Now, this is a long-term support trend line. I haven't included the touch, so I could draw it like this, right? But there's only 1-2 touches, and I believe that this was a massive outlier. So I'm sort of ignoring the COVID dump a little bit here, and we only spent a very short amount of time underneath this level, and this was a multi-touch level. So for me, it's a bit better and a closer line of best fit to the actual trend, right? And obviously, COVID was a massive outlier due to the Black Swan event. Okay, so the next levels I believe could be hit. Obviously, I think this is a really important level, which is the previous all-time high of the COVID dump, which is basically 3,400. Now, Power comes out and talks tough. I think that we could hit this in the next couple of weeks. In even like early October, the market could sell off down to this level fairly quickly. Now, that has potential to be the bottom of the market, right? And that would still be a really strong buying opportunity, right? Is that a generational buy? Not 100% sure on that. And it's still going to be 30% down from the previous highs, right? Which would be similar to the COVID dump. COVID dump was 35%. Now, the potential to come down and retest this high here, I think is probably a little bit more likely, just based on the structure, and also it depends on how bearish the Fed goes. Now, we all know that the Fed is always behind the curve, right? And that's because they're relying on data that is behind the curve. So we're seeing commodities and everything like that come down at the moment. Shipping rates come down at the moment. Even earnings are starting to take a little bit of a falter for some of the bigger companies as well, right? So I believe that the economy is already starting to shift towards more deflation. And Cathie Wood actually raised a very good point about that, and Elon Musk as well recently. So you're starting to get some of the bigger names, the celebrity fund managers, the celebrity business and entrepreneurs, I should say, coming, world's richest man coming out and putting out warnings, basically, that the Fed could cause a catastrophic result if they continue to hike into deflation. Now, deflation is actually a much bigger problem than inflation is. So we're going to see what happens if the Fed does try to avoid that. Obviously, sort of getting ahead of the curve a little bit and pausing before we end up in getting too much deflation, and being a little bit more ahead of the curve, I think is obviously going to be a lot more responsible. But let's see if they actually can pivot early or not this time. I'm probably, based on their previous history, it's probably not likely to happen. But anyway, back to the chart. This is the other level through here, right? Multiple touch level. And this was the sideways price action that was put in place while Donald Trump was sort of waging his war, the trade war against China, right? We had a bit of sideways market action for a little while with this big sell-off when it sort of climaxed, right? So this whole area through here, I think, is going to be quite important. And I would expect that the top of that holds, right? So if Powell does come out and he is quite hawkish and, talks about a lot more pain to come, et cetera, I believe this can get hit pretty quickly and we might have another little bounce off that. And then maybe after, the FOMC or, if we get another bad CPI reading in September, the September numbers come out and they're not good again, which come out in October 13th, they'll be released. And then we have, another hawkish Fed meeting in October. I believe we can come down and find a bottom somewhere around this area down here. And so we'll have a look at what that means for crypto coming up pretty soon. But I believe somewhere in this area around here is a pretty good target for the first half of, or I should say Q1 is most likely. It could, depending on how fast we drop, like, let's be honest, this big nuke here happened pretty much in 2 weeks, right? it started 1 week and then we broke the low, reclaimed the low the week before. It was a pretty massive fake out. It looks like a really nice buying opportunity, and then it just rolls over, right? It doesn't get the follow through, and that's probably your indicator. So this looks like a buy, quite tricky here. This looks like a buy candle here, right? A lot of people trapped underneath this big SFP, right? It looks like it's probably going to try and do this. So we need to make sure we don't get faked out by something like that. Before Bitcoin had its massive sell-off, it also did a candle similar to that on a daily as well, not on a weekly. And then obviously it fails to get follow through, and then you get the capitulation, right? So a big part of this dump was done in 2 days and then it just bled out for a while, right? So need to be careful of that sort of price action. If we do see it, I think it would suck a lot of people into trying to get long, right? And that might happen somewhere down here. But it could happen quite fast, right? And we could end up down here, a sell-off from here down to this level could happen in 2 to 3 weeks, right? That's what we need to be aware of, right? So the timeline is going to be pretty tough to pick exactly. But if they do come out and talk tough, which is what I'm sort of expecting, to be honest, but we could get a curveball. You never know what they're going to say. So no promises. Don't get upset at me if he comes out and talks really dovish, especially in question time, because we haven't had question time from Powell in a while. So you never know what he's going to say when he's off the cuff and not scripted. And it could cause the market to bounce, right? But if he does come out and he is quite hawkish, aka bearish, I think we could come down to this level, right? Maybe get a bounce, and then anywhere in here over the next couple of months, right? And that would be pretty much, I think it's about 35%. Yeah, it's pretty much down to here is pretty much a 40% pullback, right? And here's a 30%, right? So that is pretty much on the stock market, right? Imagine getting to buy Apple, and Amazon 40% down from its all-time highs, right? The rebound on those is going to make a lot of people very, very wealthy and very, very rich, but you have to be willing to buy when everybody else is absolutely panicking and freaking out. And so the key is to not use leverage and buy on the way down, right? Same way we sort of managed to pick up some nice buys back through here. I don't know if you guys remember, but I had my line in the sand chart to help me pick out this level through here and nailed the bottom pretty much perfectly. I was mainly focused on the DOJ chart, but it's this same level through here, and it came down, tagged the line perfectly, and the Fed came out and switched on the the liquidity tap pretty much right at the bottom here, right? And that's when the pivot happened. I sort of feel like this is a similar sort of level, and it could get hit, and maybe the Fed is trying to push the market down to here, right? We get a long-term cycle bottom, and then they change and make the pivot when we're at 3,000. Pretty much. I mean, it's 2,900, 3,000. Let's just say 3,000, right? And then that ends up being the market cycle bottom. And then we push up for, whoever knows how long, 8 to 10 years potentially. At least I think, after it does bottom, it's going to come back up and test the previous all-time high. Now, depending on what the Fed does on the recovery side of things, this could fake out here and then come back down. And it takes us a few years to get out of this. We get, big sideways sort of price action like this, or, like this, which could last a decade. But I think we're actually in the middle of a secular bull market at the moment, which actually just began on, basically 2013. So I believe that we're in the early stages of a new bull market. So I think that once it does get going again and everything goes back to normal, we get balance sheet expansion again, the market is going to take off and push for quite some time. So I believe back down here, 40% drop from the all-time highs. I believe that is a potential generational bottom buy for cryptocurrency. And also the stock market. Any market in the world will do well if we come down to those levels and you're willing to hold for a full market cycle, which is 10 years, right? That's what Warren Buffett always says. If you've read his books, right, he always says if you're not willing to hold it for 10 years, then you shouldn't buy it. And why does he say that? Because a typical bull market is, or full cycle in the stock market and in the economy, the business cycle, I should say, is 8 to 10 years, right? So you have to be willing to hold it for that long. And in crypto, because we have the 4-year market cycle around the halving, anything that you buy, you have to be willing to hold that for a full 4 years for a full market cycle, right? So if the Fed does come out and they do talk tough, I believe that this very easily could be a preliminary support level, right? Which is quite similar to this level that we had in the previous bear market, right? Which was just before the accumulation range, right? Which was this area here, right? Remember our accumulation range was through here, right? And lasted a year. I'm not sure if it's going to last a year, this accumulation range, because I do believe that it's going to finish up very quickly as soon as the Fed starts to make its pivot to pausing and they start talking about, supporting the economy again. If the stock market does crash down here, believe me, the politicians are going to be going nuts. The business leaders like Elon Musk and Cathie Wood, etc., are going to be going nuts, right? That they're already starting to pop off. I'll show you that tweet in a second. We can dissect it a little bit. But I believe that crypto most likely will blast through this weekly support at 6,000 and then maybe even come down to 14K or 11.5, where I believe if we do see those levels, that will be the generational bottom. We might get an accumulation range, something like this. I mean, this is a weekly chart. Excuse my lack of understanding the timeline because it's so compressed, but we could end up seeing, I'll try and draw it a little bit better. We could end up seeing something like this buying climax down here, right? And that sort of ends up around that November period, early November period, which Bob Lucas just put out a tweet saying he expects the market cycle, 4-year market cycle bottom to be early November, which is, 10th of November, he came out and said. And don't forget, guys, our Bali getaway trip is actually starts on the 6th of November. So maybe we've timed it again perfectly. We timed the Market Mastery 2.0 course to start at the start of the bull run in November 2020. And we nailed the start of it. So maybe 2 years later, we get the bottom of the market and we nailed it at our Bali getaway trip. Who knows, right? And we could see an accumulation range, something like this, right? Maybe we get a spring and then reclaim. And then once we reclaim this 20K previous all-time high, I think very strong chance that would be the beginning of the new bull market and this accumulation range would be over. But we could see something like this. Now, remember, usually you get a really frustrating bleed out, which usually ends up to be some sort of a falling wedge like this, right? Tried to draw that through here. Then we get the spring and the market sort of takes off from there, right? So that's what we want to be watching out for, that sort of longer term sideways price action. Sure, that could happen through here, but we're going to need a freaking miracle from Jerome Powell and the Fed over the next 3 FOMC meetings to save this 20K level as being the market cycle low, right? If not, I believe this 11.5K level is very, very strong level, and we could see the accumulation through there before we take off. Now, what does that mean for Ethereum? Probably going to come back and make new lows and potentially come down to this weekly support. Right? And we could already be seeing the start of it would make sense for Ethereum to come back here and do it market style. Like just looking at the chart, that would make the most sense. It sort of breaks out a little bit after Bitcoin, but obviously Ethereum just had the merge, and there could be other market forces that come into place in terms of adoption that change that structure a little bit, and maybe it ends up holding up and actually the accumulation range is through here, right? But I would be looking for it to take out this level through here and flipping that later on in the timeline. Don't forget this downtrend through here is going to be important as well. And getting back above this level through here, this sort of block of price action through here, I think will be quite important as well. But for the moment, I think, tough Fed is going to come down and test these lows, maybe even come lower, right? Do something like this potentially, and then push up. So yeah, back above 2K, I think Ethereum sort of you'd be looking for Ethereum potentially to move back into, a new bull market from there. And that would make a lot of sense, that sort of price action. Let me get that drawing back up. Something like this would make a lot of sense if this is the current trading range that we're in. But if the global economy collapses, stock market collapses, and we come back down to here, here over the next couple of months, Ethereum could definitely see much lower prices, and we get a accumulation range a fair bit lower. So it could come down to about 400 for sure. And the accumulation range actually happens down here, right? And this is just preliminary support, right? The same way on Bitcoin it was back here. Right, so that's what to watch out for. I believe we do have an amazing buying opportunity coming in, and this is the sort of area that I'm looking for. Let's be honest, it's probably a little bit smaller on this side. But anywhere, I think from, mid-November all the way through till April 2023 is sort of my snapshot time frame for potential bottom in the stock market, and timing, obviously, for crypto as well. The bottom will be quick, I believe, for crypto. I don't think we're going to have a really long, drawn out full 1 year down accumulation period. I think it'll be quickly reacting to what the Fed does. That is for sure. All right, guys, I want to wrap it up there. Thanks a lot for tuning in. If you want to get more information from us, feel free to join us on our Discord, which is discord.gg/Bitcoin. And also we have a Facebook group as well, Crypto Paradox. Right. And this is the post I was talking about, Cathie Wood put up before, right? She was saying that basically Larry Summers is leading the Biden administration astray with his conviction inflation is irretraceable. With the 70s guide, right? Because they're always talking about Paul Volcker, et cetera, right? And then she references this post from September 12, talking about deflation and how it was already in the pipeline before heading into, everything that happened pre-COVID, right? And then, talking about these numbers that are coming down at the moment before the recent CPI reading, right? That was a tiny little bit up from the month before, but year on year, obviously, is starting to come down. And Elon Musk comes in and tunes in. Yes, the fundamental error is reasoning by analogy rather than the first principles. So very interesting to see that, there's a little bit more pressure coming from the likes of Cathie Wood, Elon Musk, and politicians are going to be following that as well. So yeah, join our Facebook group if you're not in it at all. Crypto Paradox, we've got almost 38,000 members in there. It's a really great community. And you can also join our Discord group as well, right? Which has a lot of really cool people in there, right? Talking about our Bali trip, obviously. We talk about a lot of different conversations about the market and everything like that. A little bit of banter here and there. People always posting up their favorite links of different traders and stuff like that. And yeah, we try and navigate through here the markets. Now, we've managed to call the top in 2017, the market cycle top. We've managed to call the bottom in 2019. And then I managed to call the top again in 2021, right? So overall, between Roman, and myself, we managed to call the top of the last two market cycles and also the bottom of the previous market cycle. And so what we're focusing on now is helping to call the bottom of the market cycle and get everybody well positioned for the next full 4-year cycle on Bitcoin. So everybody can become wealthy like a lot of our members have. A few managed to retire over the last cycle. Some made ridiculous amounts of money and then couldn't control themselves and then gambled too much, not following the risk management practices that we teach, and lost a lot of it. So we're hoping that, for them to be able to make it all back plus a lot more in this coming bull market. And it's all about getting positioned in the right spot on the way down. So on the way down and at the bottom, the real wealth is built during the bear market, because you position yourself, you're putting yourself in the right positions during the bear markets, during buying bottoms, potentially this area through here, right? The people who made the real money in this cycle were the ones that bought in this period through here, right? And they rode it all the way to the top. And the same on Bitcoin. The ones that made the real money were getting positioned through here and in reaccumulation through here, right? And then, the ones who were good enough to sell with Roman when he called the top in 2017, right? Then we called the bottom through here. And it really only takes, guys, Roman managed to sell here, right? Rebought down here, and then he retired at the start of 2021. He retired when we broke previous all-time high up here, right? So it doesn't take many cycles to put yourself in a position to set yourself up for generational wealth. You only need a couple of cycles, realistically. So, sell here, manage to buy in the lows, right? And then when you get back to anywhere above the previous all-time high cycle, you can be putting yourself in the position as well to be in retirement. But a lot of the work is done during the bear market, right? So for me, buying anywhere through here, I believe, right, we'll probably have a reaccumulation period as well at some point, right? Similar to this period through here, right? Where the market sort of goes sideways and then, you take off for the next bull market. And if you can do it anywhere as well as what we did and helped all our members, right? I told everybody right here to sell, and that I told everybody that I was selling after this big weekly SFP. And I even put out a video you can check and find it in on the YouTube channel. I might put it as a link, actually, the linked video at the end of this, on exit strategies, right? That came out right at the start of November to help people try and navigate exiting their longer term cycle positions and explain exactly what I was doing, right? So now we're trying to help you guys find a way to set yourselves up for the next 4-year market cycle to build generational wealth, not only for yourself and your families, because fuck having to work a job for the rest of your life. To retire on like $500K to $1 million, right? So that's it from me, guys. Thanks a lot for tuning in. I hope this video helps a lot of you get positioned. Don't forget 2 p.m. on Wednesday, that's New York time, is the data drop, and then Jerome speaks at 2:30, which is going to be very early Australian time, but it is worth staying up for to watch live if you want to try and catch any moves on the lower time frames. Thanks a lot for tuning in, guys. If you like our video and content, please leave a like and subscribe, and I'll work on putting out more content for you guys. Please share this content with your friends to help me grow the channel. It helps inspire me a lot when I see growth in the channel to produce more content for you. So thanks a lot, guys, for tuning in. We'll see you all in the next episode.